Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Graig Suvannavejh. He's Managing Director and Senior Biopharma and Biotech Analyst over at Mizuho Americas. He joins me to discuss how exposure to Silicon Valley Bank could impact biotech companies. Graig, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill, for having me.
You got it. And we know SVB is historically a key financial institution for the biotech space. Analysts at Mizuho Americas, they assess the potential cash positions and exposure to SVB. And it looked to me as if the exposure was largely immaterial. Does this provide a window of opportunity in the biotech space for investors?
I think it does. Certainly, Silicon Valley Bank is a very important, or has been a very important institution for early stage companies. Obviously, the biotech industry as well as the tech industry, you have a lot of startups. And I think Silicon Valley Bank was always viewed as a key partner, especially for those early stage companies. And it's not surprising that you have a lot of companies that have looked to SVB for early banking relationships. So when we look at least our coverage universe, and you have to keep in mind that the biotech sector today, in terms of the publicly traded segment of the biotech industry, is probably about 800, 900 plus companies. So there's going to be lots of companies that perhaps could have exposure. We did an assessment of the companies that we cover here at Mizuho. It's about 70 biotech stocks. And to your correct conclusion, at least based on our look at our companies, we reached out to them. It seems as if that the exposure is very limited, and they have been. I've been in touch with some of my companies. Those that had some exposure have been able now to be able to move some of those monies that were held at SVB out of SVB and into other places.
And Graig, outside of SVB, when we take a look at the macro factors, rising interest rates, higher cost of capital, how is that impacting the space?
Yeah, I mean, if you look at what's happened over the past several years, the biotech sector certainly did well, especially in a period of low interest rates. Free money, so to speak, was out there, and it did allow for additional risk taking. I think as you've seen the interest rate environment move higher, that is creating challenges for the biotech industry. I think the important thing for investors to keep in mind when they're assessing biotech companies is how much cash do they have, and do they have enough of what we call a cash runway to extend into hopefully late 2024, 2025, and even into 2026. And you are seeing a lot of companies look at their portfolio, see, which things do they need to prioritize, which do they need to currently deprioritize. And every company, at least that I'm aware of, is having that exercise done internally right now. And you have seen, unfortunately, some rationalization of pipelines, some workforce reductions, which is very unfortunate for the biotech industry, but it is a matter of survival. And I think the companies that are going to be winners ultimately are those that are taking proactive steps. And I think that given the dislocation in stock valuations, especially over the past week, given the SVB situation, stock prices have come down. Now, obviously, it's in the context of interest rates that are higher than they've been the past couple of years. But I do think this provides bigger picture and opportunity.
Outside of operational opportunity, what areas of biotech are attractive right now?
Yeah, I would say that the biotech industry is one where there are companies that are particularly focused in oncology. So those are companies working on cancer therapeutics. I personally have an interest in companies that are working in the neurology space. There's still a very high unmet medical need. Certainly, technologies are areas that investors are looking for, given the success of a company like Moderna, which came out with one of the first COVID vaccines. mRNA technology, or those companies that are working on gene editing, have been looked at as an area of platform technology. So I think areas like neuroscience, oncology, rare orphan diseases, and even immunology and inflammatory diseases, those tend to be the hot spots right now, at least based on the conversations I'm having with investors.
What are your thoughts on M&A as we look to the back half of 2023 and into 2024?
Yeah, M&A is a very critical piece in biotechnology. We saw Pfizer acquire or announce plans to acquire Seagen for $43 billion. Look, large pharma companies are big entities that need to keep feeding the engine. They have patent cliffs, high profile patent cliffs, especially in the back half of this decade. So everyone is looking at what are the next opportunities. M&A has always been part of that. I think the interesting thing that we'll be looking for is as valuations have come down in the biotech sector, do large cap companies, which are still very cash rich, are they going to be opportunistic? And the thing you have to keep in mind is they have to be strategically aligned M&A ideas. It's just not because a stock or a valuation of a company has dropped 30, 40, 50%, and all of a sudden pharma becomes interesting because it's cheap. It has to have a strategic overlap. It has to be a core area of interest that they want to add on, whether it's a technology, whether it's an asset. I do think that M&A is something that investors are hopeful will pick up in the back half of this year. Although if you look back over the past couple of years, there was a lot of hope that M&A would be much bigger than it has been. It hasn't been, but I think that's because valuations were higher 2 years ago. They're starting to come down, so we're all hopeful that we will see more M&A to stimulate more interest in the space.
Yeah, your space certainly is the most interesting one when it comes to M&A activity. Graig, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Joe.